In this video, I'm going to teach you how to trade the Asian session profitably. I just entered a trade with this exact system that I'm going to teach you guys. If you've been watching my live streams, you know that I've been able to call the Asia session every day, and I've been asked a lot of questions about it. This video is for those guys that have been watching the live streams. This is the setup you're going to be learning about, and then we'll go into examples and you'll have a full understanding of exactly what to do and how to do it. The Asian session is helpful for new traders. You don't have to be at work. It's going to allow you to trade while you're at home on your computer instead of trying to trade on your lunch breaks and in your car before work, or even worse, while you're at work, you're on your phone or your laptop trying to trade, and it's super frustrating. I know, because I've been there. I didn't have this information while I worked. I wish I did. If I did, it could have been an absolute game changer for me. Let's get into it. It repeats pretty much every day. Same thing. It's easy to trade, easy to capture. And for ones that are familiar with my channel, I know I told you the next video was going to be the third installment of one trading system to rule them all, but I've been able to call what the Asian session was going to do, and I've had a lot of questions about it. This video is for you guys asking about it. I believe the best way to first learn something is through diagrams, which if you've been watching my channel for a little bit, that's how I roll. Let's get into it. What exactly are we looking for when we're looking for this Asian session setup? We're going to imagine that this is the New York close right here. Now this right here is the price action at the New York close, which I mean by that, the New York session close, which is going to be, what time does the stock market close in New York Eastern time? Which is going to be 4 p.m. Eastern. Now, when it opens up an hour later at 6 p.m. Eastern, no, at 5, yeah, and then it piddles around for an hour, but we're not worried about that hour after the New York Stock Exchange close. We're only worried about the hour, and it doesn't matter. What notes is the New York Stock Exchange close. Now, when it opens back up for the Asia session, price may go this way, or it may go this way. We're not concerned about which way it goes at the opening. Now, this movement that goes up is what you call a macro. We're going to call this a macro. It's the first macro. Price moves up, and then about an hour later, this macro ends, and then price is going to head back towards the New York session close. Now, what it does here is very important. It can either bounce here and go up, or it can bounce and reject. This is two scenarios. All right, I need to restart that. Now, once that macro ends, price is going to start moving back towards the New York close, like that. Either it went bearish or bullish, doesn't matter. What's important is that it starts moving towards the New York session close. And this usually is going to happen about an hour or into the session. You get the reversal, and then you start getting the movement towards it. This inward macro is, let's say, 30 minutes to 45 minutes, somewhere around there. 30 or 45 minutes for it to get back to the opening. And then from there, this is the important part. Does it bounce at the New York close, or does it go through it? There's two scenarios I can play out, just like the opening here. We're not concerned about the opening. We're not concerned about the scenario that takes place as it goes into it. We're concerned about what happens after that scenario. Does price come into it, and then go up? Does price, once it hits this, does it go boom and then bounce here? Or does it do that for the bearish side also? This is what we're concerned about right here. What happens here? Does price move up, or does it move down after testing the New York close? If it does go down from here, then we will be looking for a movement down that is aggressive, that causes displacement. And then a fair value gap will form in the middle of the displacement. That is where you'll want to enter to go short. But if you want to take a really safe play, you can wait for this right here. You wait for a low to form and then a retracement, another move down that breaks that low, and then for the ITOB to be tested, which if you haven't checked that out, I just made a video on it. That would be your entry for the short position off the ITOB, or you can enter in the fair value gap near the same, it's near the same entry price, but one is more likely to offer better risk reward, which is the first one, but this one's going to have a higher win rate probably from what I have studied so far. And then you go short there, put your stop above this high that formed there. Now let's say price came into it from this side. Let's say price came in, god dang, what the fuck is that? Does price come into it from this side? Does price come into it from this side? Bounce there. Does price come into it from this side? Bounce and pull off. Doing the same thing. Fair value gap forms, and then you would enter on that fair value gap. But if you want to take a safe play, or you can scale out up here and then wait for the re-entry right there, and then boom, you have fair value gap there, and then you have the ITOB right here, and voila, then you enter there, put your stop below there. If you entered on the fair value gap, always wait for a little reaction so you have somewhere to put your stop below, because if it keeps going lower than your original entry, you might as well just exit and you can re-enter again. That is what you're looking for. The risk is small and minimal, but the reward is usually +3, 4, 5, maybe 6R. You guys understand that? You have the New York, this is the New York close, Asia session open. You have fair value gap, ITOB entry. You have the fair value gap, drop down, ITOB secondary entry, ITOB secondary entry, and then boom. I usually aim to exit after 2 hours. We'll go in and do a deeper dive breakdown. It's been about 2 hours and 15 minutes. That's how long it took me to make that stupid diagram for you guys. Not stupid, it's actually really good. I'm up about $800 far. Up here it was over 1,000. I missed it when I was making that diagram though. You saw when I first showed you when we started the video. This is not replay, by the way. You can see it right there. It's not replay. 501.25 is the New York close, which is going to be 4 p.m. on the dot. That's right here. There it is. There's the New York. Let me make that a little bit darker so you guys can see it. There you go. Now you guys can see it, right? Here is the New York close. That's the line. Price opened up here at the Asia session. This is the Asia session. And this gap between it's after the New York Stock Exchange closes, and then it has a little bit of movement until then it closes for an hour at 5 p.m. and then opens back up at 6. Here is actual Asia range, is in orange. What price do? Price fiddled around for almost 2 hours this time. Usually we're looking for an hour of movement in one direction and then a return, but this time it just fiddled around in the middle here and then went to the New York close. Now what happened here? Price pulled up. Hold on, I gotta adjust my stop real quick. I'm not trying to get stopped out of this. Yeah, I just gave up half my profits if I get stopped out there. All right. Sorry, I trust this setup much now. I can just go hard on all my accounts, but it is now dropped down. Put in a market structure shift. It's definitely going down. It is what it is. It's my fault. I should have set an alert or something like that. Sell one more of this. I'll leave one on just in case here. I already exited all my other accounts. Just this one. It does suck though, not gonna lie. I gave up from 31, pretty much all my profits on the trade, because I entered here-ish, and then it went up to 532, 515. Let's see how many points that is. 17 times 3, 51. times 20 equals $1,000 on each account. That blows. What happens next? Put 3 points on either side of the line if it's in Q. And then if you're trading ES through the S&P 500, put 2 points on either sideline. And this will be your zone, your go zone. You're not going to enter the trade unless price enters the go zone. And then what are you looking for after price hits the go zone? This right here. This exactly right here. Aggressive price move up with displacement. You must see the displacement. Now what's going to happen? Price is going to displace, and then it's going to give you a small retracement. This is where you're going to enter, right? Exactly where I did. See that? That's exactly where I entered. And then price is going to move up, and you're going to take some off. Why are you going to take some off? Because price is going to come back down to the original ITOB. Where is the original ITOB? Oh, I just got to take the brackets off of here. They're annoying me. Okay. Where is the ITOB here? Right here, guys. Why is that the ITOB? If you don't know, then you need to watch my last video. Boom. ITOB. It fills the fair value gap. Put an intermediate term low. Becomes what? An intermediate term order block. That right there is your entry. Your secondary entry. This move up's great and all, but this happens almost every time. Not every single time, but a majority of the time, it is going to come back to the original ITOB. This is a secondary ITOB. They're great. They're usually where price will reverse, but this one filled the first fair value gap. Therefore, that's the one you should trust the most. When price comes down here, if it had bounced here, that's all cool. You can enter there, but price didn't bounce there, did it? It just ripped right through it. And then the first touch, this is very important. The first touch on this ITOB here, or the first dip down right here, when it first touches it, that first touch needs to have this characteristic. You see there, like we take the top to the bottom of the ITOB, it doesn't break the 50%, does it? No, that's good. That's what ICT would call consequential encroachment. I'm sorry laughing. I just laugh every time I fucking say that word. Like, it's just like, geez, man, come on. What's wrong with 50%? Anyways, that's a consequent encroachment, meaning that if it goes past 50%, it's not high quality. That's a good way to say it, but I just look at it as a clue that I'm going to take the trade. But anyways, all right, sorry. Try not to laugh at the guy, but fuck. Okay, and then price does a little 1, 2, 3 push down. Doesn't close below the ITOB. See that? No close below it. Even the closes of these candles are 50%. That is something else telling you that the algorithm is noting and respecting it. And then price does this damn thing. How long does this last about? It lasts about until 10:30ish. I did a little testing just now, and sometimes the movement to the New York close differs. Sometimes it's an hour, sometimes it's 30 minutes, but it's usually within the first hour and 45 to 2 hours, somewhere in that area, I would say. You can trade this, it's really directional, but like today, you just got chopped out a bunch of times. That's what used to happen to me when I was trying to quit my job. I would just get fucking racked. Okay, and then you have this ITOB, secondary ITOB, and then we'll call this one the third one. That's the ITOB walk up right here. And then what happens after that is price is going to consolidate for probably until midnight. So another hour is going to consolidate. Something like this is what I would guess. It's going to put in movement, and then the New York opening, or the midnight opening will open, and then it's going to choose a direction again. A lot of times they like to leave double bottoms, set traps for people, but then it's going to choose a direction, and then you're going to get another move up, or it's going to be another move down. And then it's going to pick one of these sides to be near at the New York opening. You'll notice at 8:30, that's when price starts heading to one of these sides. And then price likes to... Alright guys, I fudged up the big trade when it came back down here into the third ITOB, which I'll cover that in the 4th video, how to trade those and what they are and all that. But I re-entered. When we came down here, I looked at the previous session and what it did and spotted this pattern here, the one, a lower high and then a big higher high. What ended up happening is it grinded up, and then eventually when it reaches up here, it'll probably blast off. Anyways, that is a wrap. You guys, check out my website. It's down here, right there. verifiedfundingcompanies.com. The best discounts in funding you're going to find. And be on the lookout for the 3rd video. I'm making it now.